bank reconciliations. So bank reconciliations form 25% of the marks in the exam. And in the exam you'll have 2 or 3 reasonably large sized bank reconciliation questions. And so the key points in this chapter are you're actually going to follow the same approach at all times for the bank reconciliation question. So if you see a bank statement and you see a cash book in the sort of the same question, you'll know that's going to be a bank reconciliation question. And the actual questions are all exactly the same. Even though the examiner is going to try and mess around with the 2 or 3 questions to try and make them look different. Different types of bank statements, different types of things that they're asking for in terms of numbers. But the actual the control, the bank reconciliations and the steps to do it are going to be the same. And then we're just going to take out the numbers that we have in our steps that we've done, and we're going to then slot those into the answers. So that's the important thing to just remember, is that a bank reconciliation is exactly the same, and all of the questions that you get on the bank reconciliations are going to be the same for 25% of the marks. And the thing that you mustn't do is you mustn't change your approach. So in the workplace, rather than in the exam, the bank reconciliation is in 4 steps. So in the workplace, step 1 is we reconcile the brought forward balances between the bank statement and the cash book. Now that's actually the production of the previous month's bank reconciliation. Step 2 would be that we're going to tick all the cash book items to the bank statement. So we tick all the items in the cash book that we can find in the bank statement. We tick them off on both sides. Step 3 then is anything that's actually left over in the bank statement that's not ticked. After sort of ticking off the things that we've reconciled and they've brought forward balances, the previous month's bank reconciliation items that come in there, and also all the items that we got in the cash book. Once you've ticked all those ones up, there'll be a few items left in there, and those will be missing items from the cash book. So things that have actually happened, like bank interest or loan interest or bank charges, things that are missing from the cash book that we only find out by looking at the bank statement. Then, once we've updated the cash books, we've got our revised cash book position, we then reconcile that to the closing balance in the bank statement. We check that they're the same, and that's our bank reconciliation. Now that's in the workplace. In the exam, they're not going to give you the last month's or the last period's bank reconciliation, because that would make it a bit too easy, because you now have the template of how to answer the question. So instead, you're going to have to reconcile the brought forward balances yourself and find out what were the items that were in the previous month's cash book. So to do that, you reverse steps 1 and 2. So you tick all the cash book items first, and then you reconcile the brought forward balances. So, given that this is a very straightforward question, we've got 3 questions here that are exactly the same, adding up for 25% of the marks. How is it that students fail this question? Because it's pretty straightforward, really. Well, the way that students fail this question is that they take shortcuts of producing the answers. And the examiner is going to tempt you with that possibility. So again, the examiner is not going to ask you for the full bank reconciliation, only going to ask you for parts of it, and to try and see whether you will, as the student, shortcut the answer and just do parts of it. So that's what they're going to do first of all. They're going to then see whether the student then will make up their own different approach to try and save some time or make a shortcut or whatever. And because they haven't done the full bank reconciliation, they haven't then effectively checked their work for arithmetical errors. If you prepare whenever you see a bank reconciliation question in the exam, there isn't going to be any errors in the cash book. So the cash book's going to be right and the bank statement's going to be right. So they are going to reconcile if you've added the thing up correctly. So if you do the bank reconciliation and you find that they don't reconcile, you've made a mistake and you can go back and correct your error. But students don't tend to do that quite a lot of times, and as a consequence then miss out on lose marks because they just made a silly mistake, really. So 25% of the marks can be lost by students by just being tricked, really, and taking shortcuts. It doesn't actually affect time in terms of you will be given a lot of time. So instead, what you're going to do is you're going to produce the full reconciliation first for the question. So you do a full reconciliation and then take the numbers out of that and drop them into the answer. So to give an example of how the examiner will ask a question, this is the question from the AAT draft assessment. And in it, we've got 10 marks, so 15 minutes. And here, we've got a bank statement and a cash book, so we know that this is a bank reconciliation question. And it says, update the cash book, essentially is what it's sort of saying. Update the cash book here, and then give us what the balances are. Now in this instance, to answer this question, you could just do steps 1, 2 and 3 of the bank reconciliation. You don't need to do step 4 to reconcile the bank balance. But if you did step 4, you would know whether you made a mistake or not. So any mistakes that you made would come out of step 4, and then you go back and correct them. So you definitely get it right. So you do the bank reconciliation fully, then you'll definitely get it right. We've got 15 minutes here. This is not really 15 minutes worth of answers really in here, so we've got the time to do the full reconciliation as well. So the time is given to do the step 4 on top. So there's no rush, and there won't be a rush in terms of the entire paper. You could clear it, but you will clear it early anyway. You won't have a problem in terms of time. So this is an example of how the examiner is going to mess about with the questions. They're going to sort of try and see whether you won't do the full reconciliation and ask you different kinds of things like what's the reconcilable for balances or something like that, or ask for the cash book. And then they might ask for a full reconciliation as well, and they'll sort of jig it around a little bit. That's the first thing that they will do, to see if you're the kind of student that will take a shortcut, not do the full reconciliation, and then lose marks as a result. You won't be doing that, and we're going to do the same technique for all 3 questions that you're going to get in the exam. The second thing that we might do to just somewhat change around the exam and try and confuse you a little bit is that we'll have the bank statement here and the cash book here, and the bank statement here might be using different types of layouts. So here, this is one of the things that confuses students the most, is that we've got here the starting balance credit 1020. Yeah, so credit in the bank statement, and it's actually debit in the cash book. So here we got a debit balance of 1020. The bank owes the company 1020, and here we got a credit of 1020. And what this actually means is that the bank statement is from the bank's perspective. So the bank statement owes the company £1,020. The company is saying that the bank owes it £120. So it's credit in the bank statement because this is the T account for the bank, not for the company. So you got that as an option really of how they might lay out the bank statement in the first one really, and they might lay out the bank statement from the bank's perspective with debits and credits from the bank's perspective, but you've got the cash book from the company's perspective, so the opposite way around. And we can see here that we've got this debit, which is a payment out because we're reducing a liability as the bank, and a credit, a payment in, increasing the bank's liability of the company, so increasing the company's assets with the bank, all the way down until we get to this last closing balance here, which is a credit for the bank. So the bank owes the company 1036 because it's from the bank's perspective, but is a debit from the company's point of view in here because the bank owes the company money. So that's option 1, that they could lay out the bank statement. Alternatively, they might dispense with the debits and credits in there, and they might have positive and negative money. So this might be £1,000 balance here, negative 46. So negative 46, which will drop the balance to there, positive, negative, positive, positive, negative, positive, etc. So the money in, money out method of balances. In that case, then these figures are sort of, this is a credit here, and this is a debit from the company's perspective. So you've got 2 different ways you could do that. There might be other little attempts to try and sort of just jig it around slightly differently. Maybe not even put the balances in. Maybe you have to add up the balances yourself. So how do you answer this bit? Well, you're going to orientate yourself. You're going to look at a payment, really, sort of a payments in and a payment out, line them up, and you say, right, okay, well on this one here, this one is a 46, and it's a payment out, so it's a credit for the company. We see that the bank's calling it a debit. Okay, so this is a bank statement from the bank's perspective here, and that credit there, that starting credit then, is a debit in the cash book. So that's how you would work that one out. So first bit you just need to do is orientate yourself on the bank statement, and that will probably be the only really tricky thing within the bank reconciliation. Just how is it we get used to the bank statement, and the way to do it is just find a payment in and the payment out, line them up, and just get right which way around we are. And when you find out which way around you are, then you'll know what the opening balance will be in terms of how it will line up against the cash book. Okay, so the 4 steps of a bank reconciliation. And remember, for every bank reconciliation question, these are going to be exactly the same. It's not going to change at all, regardless of the question. So, step 1. I've got my bank statement here, and I've got my cash book here. And the first thing I'm going to do is I'm going to take everything that I've got in the cash book to the bank statement. So I tick them all off, so there's 6 and 70 there and whatever. I tick them all off here, and I've got rid of those ones. So these now have disappeared. We know that all of these amounts in the cash book have all been paid in the bank statement. Paid in or out in the bank statement. That's step 1. Now I do that one first because it's now narrowed down the options for step 2, which is what is the reason for the differences between these brought forward balances here. This one is a bank statement set out with debits and credits in here, and it's from the bank's perspective because we're lined up there. There's a credit there which is actually a debit. Okay, so money going in what have you here, and there's a money going in one there with a debit there. So we know that this is from the bank's perspective in here. So minus money to start with from the bank's perspective, minus 301, minus 379 in the cash book. What's the reason for the difference? And the reason for the difference is that these are cash book items that happened in the previous period. So in the previous period, there's some items that happened, and then now they come in the bank statement after the period end. So if I go to step 2 and I'm reconciling the brought forward balances, there was the minus £301, the money that was owed to the bank by the company. And these items here, so this payment into the bank and these two payments out of the bank, so outstanding lodgements, which is payments into the bank that hadn't cleared the bank statement, and unpresented checks, payments out of the bank that hadn't cleared the bank statements. They were in the cash book beforehand, in the previous period, and hadn't been in the bank statement at that end of the month. And you can see that they appear here, and here, and here. So they appear after the month end. So this money here clears a few days after, and then these checks only get paid into the bank account, much later. The items that are going to be reconciling the brought forward balances are going to be quite close to the top of the bank statement. But in this instance, you're just going to work that out by trial and error. And because it's a need to do it by trial and error, that's why we do the step 1 first of ticking off as much as we can. So we've just got to do this trial and error thing between here. We're trying to find the difference between those two figures there, and we just have to play around with the numbers to find out what it is. It's not the way in which you do it in real life. In real life, you've obviously got the bank reconciliation for the previous month. But that would be too easy as a question really to sort of give you the previous month's bank reconciliation. If I gave you this as the start point and then you were just using that to tick off those 3 items in here, that one, and that one should be going, then you've got the nice layout of how to do bank reconciliation. So you're not going to get that from the examiner. So we now tick off those items because they were in the cash book and they were up here somewhere in the previous month. We tick those off, so we've now got all of the items in the cash book and the previous period's cash book that have already appeared in the bank statement, so they're cleared. Now in real life, the previous cash bank reconciliation might have items that still haven't cleared the bank statement, but in the exam, all the items in the previous bank reconciliation, they will clear in the bank statement, so that they will definitely clear in there, and then there'll be nothing missing. So we've now got to a situation now where we've got these items here, which are in the bank statement, these two in the bank statement, and they're not in the cash book. And then step 3, they're basically missing. So these items here, this payment in from a customer here, and this payment out to a customer, let's say it's a standing order that we don't have, or a direct debit that we didn't know about, and in there, those 2 items there are missing from the cash book, but they're real. So we update the cash book for those 2 items. So we go and debit the money in and credit the money out. Yeah, and we're revising our brought forward balance. So here was our carry forward balance in here. We bring it down to here. We put the 2 items in and we create the new carried forward and the new brought forward. So this is the balance now on the revised balance on the cash book. So you've now got a revised balance in the cash book, 276, and we've got this final balance here, 189. So there's minus 276 here, and minus 189 in terms of money out, negative money for the company. So minus 189 in the bank statement, minus 276 in the cash book though. So what's responsible for the difference? Well, the thing that's responsible for the difference is anything that is in the cash book that hasn't been ticked So this payment out here is the difference between the two items. So that's the section 4, prepare the bank reconciliation. So this one here hasn't been ticked. So it's a payment out in the cash book, so it's reduced the cash book, but it hasn't hit the bank statement. Now there might be sometimes some payments on the other side, payments into the bank statement, into the bank that hasn't cleared the bank statement yet. So you could have some payments out, we could have some payments in. Payments out are unpresented checks, payments in outstanding lodgements. So here's our bank statement balance here, and now we've got the bank reconciliation here. So bank statement balance minus 189. Getting to the 276, what's the difference? Well, it was that unticked item, the unpresented checks. If we had outstanding lodgements, they would go into here. And that really is our bank reconciliation there. So we've done our bank reconciliation, and we've not actually touched an answer yet in the exam. You don't do any of an answer yet, they'll just wait, and only when you got your bank reconciliation complete. So the bank reconciliation is complete and it reconciles, which it will in the exam. There will not be any errors in the cash book that mean that the bank statement does not reconcile to the cash book. Only when you have that, and you've got that bank reconciliation reconciled, you'll know that the answer is 100% correct. At that point, all the figures that you've got in terms of what is the new carry down balance on the on the cash book, or what was the differences in the brought forward between the brought forward balances, you can now drop those into the answers into the exam answers in the exam, and you've got 100% knowledge that those are the correct answer. If you don't go from this point of view, so you instead of using the 1 2 3 4 step method, then you'll miss something, you'll get something wrong, and you'll lose really easy marks in the exam. So you can guarantee yourself nicely 25% before you even started, 100% for these questions. Pretty much straightforward and nice and easy, as long as you do just the four steps, orientate yourself with the bank statement to be able to achieve it, and only then drop your answers into the exam paper. So that's how you do it. Yeah, that's the bank reconciliation. I've put in the playlist now some sort of worked examples in there. There's some more questions in the book for yourself to do them, and if you want to do lots more of it, then there'll be the example assessment exams as well available, and you've got the AT ones as well. So you've got the 4 steps in there. You apply them. It's the same question and the same answers and the same approach for every single bank reconciliation question, regardless of the different layouts that you'll be given. And just practice those ones now, and then get the easy 25% of the marks really that you're going to get, and don't be moved out into something different. In the next chapter, we're going to consider errors in the accounting system and how they're going to impact the trial balance. And we've seen an error within the bank reconciliation, an error of omission, where things are missing. They're in the bank statement and they're missing from the cash book, and we have to update our cash book for that, which we've done through a bank reconciliation. In the next one, we're going to see errors in the accounting system and how they're going to impact the trial balance. Is the error going to mean that the trial balance no longer tallies, or not really? So this one's going to be about journal production. Has a journal been produced that whose debits are equal to credits, and a sort of double entry bookkeeping exercise. So this is why introduction to bookkeeping is important to be doing, to be able to have a good strong knowledge of that, and double entry bookkeeping before we come into this unit. And if you don't feel fully confident with your double entry bookkeeping, then you should go back to that unit and especially do the paper and cups exercise to be sharp in terms of the business entity concept and how double debits and credits work. Really, don't use dead click. You must use money in, money out, positive money, negative money. See you on the next one. Thanks for listening. Bye bye.